Everyone, welcome back. I wanted to say thank you to the 125 unique viewers that have come to my channel in the last 3 weeks. That's 125 more than what I'd expected. I'm not a finance expert, and this is not a channel that gives financial advice, but I'm on a journey to introspect and reflect as I look to build wealth. I'm also hoping that I can motivate some of you to do the same. I'm documenting all the mistakes that I've made, and hopefully, we'll look back at these to reflect as I hit my $1 million portfolio goal. I think I can get there if I'm focused and persistent. I started investing in 2019 with one VOO share. I shared with you in my second video on investing that I was close to hitting the $2,000 annual dividend mark. I've done that now. I've actually hit the $2,000 annual dividend mark. I'm really happy. I'm really proud about it. $2,000 per annum, roughly amounts to $152 per month. Some might say that growth investing is better. To me, there needs to be a balance. Although I like seeing the stocks increase in value when I'm invested in growth stocks, I love the dollars that I received through dividend investing, no matter how small they are. I think one example I'd given in one of my previous videos was the Nvidia dividends. Nvidia gives 4 cents a share per quarter, 16 cents per annum. And you know what? I love it as much as I love any other dividend that I get. To me, this is one of the best forms of passive investing given my current situation. I, I'd mentioned that I do not want to go into real estate. I do not want to take the risk as of right now. Now, I can do anything with my dividends. I can reinvest them. I can buy groceries with them. Or you know what? I can even buy growth stocks, which I actually do. I wanted to share with you where my dividend portfolio currently is. I've invested in pretty much all of my dividend making stocks over the last 2 to 3 weeks. So let me just share with you where my dividend portfolio currently is. Okay. So as you can see here, I have been investing in all the dividend stocks that I had previously. One thing you'll notice is a big spike in the S&P 500 or the VOO shares. That's because I had sold my Tesla shares, which I'm not proud of still, because again, I want to look at myself as a long-term investor. You can go and check out that video that I put about the sale of the Tesla shares. But you know what? I feel good about the fact that some of the money that I got from the sale, I put in the VOO shares. That gives my account some stability, given the situation that we are in, given the volatility that we are in the stock markets. I think S&P 500 is probably the safer bets right now, if there was one. Now, as you're going to see some of the other stocks, I have been actually continuing with my philosophy of fractional share investing. I've put about $600 extra outside of the VOO for all other shares. And I think of the $600, I would say $250 to $300 was my dividends getting reinvested into the market. And then some of the money I put myself. So as you can see, one of the things is that I personally feel that if you have small sums of money, all you need to do is go and invest small sum of money into a fractional shares and forget about it. So for example, Target, I bought 0.1 shares of Target. Now, am I worried that Target might fall tomorrow? Given that I'm investing into 0.1 shares, I'm absolutely not worried. What else would I have done with this money? I would have gone in and I would have, got myself a good lunch, got myself a good coffee, got myself a lot of other things. And I think here, even though the value of what I invest in might fall in the short run, it gives me an opportunity to be invested into a stock that can grow in value in the long run. So that's why I've said, when you go into the market, go slow and steady. You don't have to go and jump into it all and invest $10,000 or $15,000. Even $1 or $2 in the long run, it'll do wonders for you. And that's what I live by. My portfolio has grown to where it's grown, just by investing $5, $6, $7, $8 sometimes every single day into the market. And you know what? Sooner or later, you find out that you've actually increased your portfolio value. I just wanted to bring your attention to this point here. We had the Morgan Stanley shares. I like Morgan Stanley as a bank. I'd mentioned that. The share price as of Friday close was $101.50. But you know what? I had sold 50 shares of Morgan Stanley at $50. So I definitely lost out on the upside that Morgan Stanley showed going forward. So again, one of the examples of stay invested for the long run, because that's going to be the most important thing. Selling your stocks, getting out of positions is only going to stop you from making this portfolio grow in an organic way. There's going to be a lot of if you come out of a position, you don't give it a chance to grow. You just don't know what's going to happen tomorrow. Therefore, I believe that find a good company, invest in it, and forget about it. Again, I wish I had not sold my Morgan Stanley shares for $50, because now they're $101, and I think they're going to be a safe bet given the interest rate environment that we are in right now. Another thing I want to point out was that my portfolio is still 25%. That is the dividend portfolio. This does not include any of my growth stocks, my Tesla, my Adobe, Lucid, and anything else, or Meta for that matter. None of the non-dividend making stocks are in here. So it's still up 25%. I was up 30% the last update. Obviously, I've put in more money, and when you put in more money into the market, your returns go down, at least in the short run, because your stocks need time to run and grow in value, and therefore the returns increase as the time goes on. But I'm not unhappy at all. Given the market situation right now, I'm only down 500 basis points, or 5% really, or 5 points, from 30% to 25%. So I'm quite happy. Another thing I'd mentioned in my previous stock portfolio or dividend portfolio update was that I'm quite happy when I see that my dividend yield is only 1.58 or 1.62 as it currently stands. And you might think, like, why am I saying that? Why am I saying that is because I think any investment decision based solely on yield is not a good investment decision. My philosophy is go and buy good companies. And you know what? If there's a dividend that comes from it, great. Take it and run with it. So the fact that my dividend yield is actually small at least gives me one indication that I have not built my dividend portfolio just on the basis of dividend yields. I've built it on the basis of some fundamentals of the companies as well. Microsoft may not be, may not be paying a lot. It pays 62 cents per quarter. But you know what? There's share buyback programs. There's growth of the company. All that matters. I still like the fact that I get what I call this free money at the end of the day. I'm at $2,005.11. If I were to extrapolate my dividends on an annual basis, obviously this is not guaranteed. Any company can withdraw the dividends anytime. Happened to me with Disney and with Boeing. So again, yeah, that can happen. But as of today, this is where I stand. And going down, just as an illustration, I have a gain of 24,754. Last update, I had a gain of 28,040. I've lost out $3,286 worth of gains. Market has been pretty bad. I'm actually pretty surprised it's not much bigger than this. In my other stocks, which are the growth stocks, I've taken a beating. But at least here, it's not as bad. So I'm very happy that I have a mix of companies that have sort of withstood the pressures that are on the market right now in the last 3 weeks. This is a good illustration, I think. When somebody says to me, $2,005, who are you kidding? This is nothing. First of all, this is me building a passive income in the last 2.5 years. So, for me, that's pretty substantial. But yes, you can say on an absolute terms, this is nothing. $2,005. I get it. So what I did was I looked at average annual income of an average American, and that's about $60,000 per year. So I did my analysis just to put another perspective on this, a powerful perspective on this from this angle. So per week, an average American, or sorry, per year, an average American makes $60,000. From a per week perspective, that amounts to $1,153. If I were to say, people work 40 hours a week, that means per hour you're making $29. What I have here is kind of like a metric that I kind of like put for myself. What I did was I divided the annual dividends by the hourly rate that I make. And when I do that, or when an average American makes $60,000 is what an average American makes. And when I do that, I get $70. The way I look at it is I have been able to purchase 70 free hours, once since I've started investing in the stock market. That means somebody else is working for you 70 hours and making you money. Another way to look at it is your dollars are actually working for you while you're sleeping, while you're having fun, while you're working, while you're doing whatever, and they don't get tired. The dollars are making you dollars. They don't get tired. They don't complain. And you know what? They work 24/7. So here, with this dividend portfolio of $2,000, $2,005 per annum, I believe that I've been able to purchase for myself 70 hours of freedom in a year. Small today, but trust me, this will continue to grow. This is something I'm focused on, and I'm going to be actually looking at it from this perspective. I have somebody working for me for 70 hours, and actually paying me money. Some perspective to keep in mind as you build wealth. It does not happen overnight. It's not a game to be, done overnight. This is a game that's to be played over a long period of time. But I know that I will generate wealth because I'm invested in the market, and I'm actually, looking at passive income as one of the most prudent things in my future plans. So again, 70 hours. Somebody else is working for me for 70 hours and paying me money. That's how I look at it. Some people are working late at night for their companies. Therefore, I could get paid dividends, and I'm happy about it. Another perspective, I have $154.24 a month. Rate of return, 10%. Some could argue this is high, but you know what? It's historical. I'll stick with it. I'll go with that. The future value of all the dividends, if I don't do anything, and I just simply reinvest my dividends, by the way, if I reinvest my dividend into these dividend making stocks, my dividends will grow. But I'm assuming my dividends are not growing. Future value of my dividends is going to be $206,355. Future value of the principal, which is the 124, 121, will be $1.3 million. So I'm not taking that out either. I just want to make something very clear here. I have a very good buffer of emergency funds. This money that is in the market, I don't need. So I've been able to, first I built a buffer, first I built an emergency fund, and then I started investing. So for anybody who's looking into it, just wanted to make sure I was clear. All of my money is not invested out here. I have actual hard cash with me if something was to go awry. Even though there's high inflation, I think having some cash with you for daily needs is an important thing that everybody needs to do. Anyways, if my portfolio were to, all it was to do was to just take this dividend and reinvest it every month into these stocks out here, I would this portfolio that I've developed or built in the last 2.5 years will pay me $1.5 million 20 years from now. I believe this calculation is of 25 years, so my apologies. It's not 20 years, it's 25 years. In 25 years, I'll have $1.5 million. That's pretty cool, right? I've gotten myself in a position that I don't have to do anything incremental. Will I do something incremental? I definitely am going to put a lot more money into the market. Now, one thing I wanted to finish with, what has allowed me to actually do what I've done. I have saved 25% of my take-home pay every single month. And I've kept it away. Either I've invested it, I've saved it, and that is outside of the 401k. So when my 401k gets paid and I get my net income in my hand, I take 25% of it and I invest it mostly. So not my 401k, I'm not even counting. That's there. It's building on its own. For me, that I look at it as a tax advantage vehicle as opposed to anything else. But you know what? I have a savings of 25%. I'm actually in the process of learning about 401k a little bit more. I'd gotten a comment about 401ks and Roth IRA in terms of H1B, which is the international workers. I'm actually doing a little bit more research there before I actually make a video and put it out there. But 401k, I don't pay much attention to. It's matching my company. I do the company match, and it's there growing. I don't even look at it. I do not even consider it right now. My focus is this portfolio. My focus is growing my dividend income and my passive income. The second thing is, obviously, as I mentioned, I do focus on my passive income. I want money to work for me. I don't want myself to work for me. I want my money to work for me. In the long run, if I can, somehow through rental incomes or through dividend incomes and so on and so forth, if I can get, close to $100,000 per annum, you know what? I think I'm just going to go back to my village and, retire there. I don't think I'll have any problems whatsoever. I have a very long-term view in anything I do. I have no problem in foregoing, my current, my current, pleasures for that matter for the long run. So I have a very long-term view. I live very frugally. I don't spend much on my clothes. I don't spend much on myself. Although with kids, I have to spend money, but on myself, I definitely don't spend much. On my clothes, I don't drink, I don't smoke. That I think is a big money saver on its own. So again, if that's, they just identify the drains in terms of what's sort of, draining your money and just plug that gap. And I think whatever money you save, just put it in the market and forget about it. So definitely I have a long-term view. And I'm focusing, more on prudent investments, right? So the Microsofts of the world, the Apples of the world, and I'm not focusing on speculation as such. I put some money in speculation. As I mentioned, I put money in Asana. I put money in, Lucid. I put money. I even bought a couple of shares of Rivian. So I have been, putting money into speculations. I've bought some cryptocurrency, so on and so forth, but very little, right? Focus on prudent investments. Do your due diligence. I think that's where I am right now with my dividend portfolio. So guys, I think anybody can build it. Just be patient and get to it, focus, and more important than understanding the fundamentals, which are actually very important, is actually be psychologically more stable in terms of holding on to your investments even during downturns. This is what I'm learning. Again, all the views in this video are my own. This is not a financial advice. This is something that I'm trying to do for myself and just documenting how things have been unfolding. And these are interesting times because the market has been falling, but I hope I can build a community of folks who really want to build wealth. And I'd like to learn from some of you as to how you're doing it. Anyways, guys, thank you so much. I will connect with you again. See you later. Bye-bye.